Could Donald Trump's return to the presidency boost the U.S. economy? His supporters believe he can reignite growth and prosperity. The current economic landscape presents a mixed bag. Inflation has slowed and wages are rising. However, the cost of living remains high, particularly for housing and food. These issues impact household budgets significantly. The job market is robust, with low unemployment and numerous job openings. This strength offers a solid foundation for potential growth. The stock market reacted positively to Trump's victory, with the Dow Jones Industrial Average surging over 1,500 points. This suggests investor confidence in his potential to stimulate economic growth. The market often anticipates policy changes that could benefit businesses. This initial reaction provides a snapshot of market sentiment. In this section, we delve into the intricate balance between the potential for increased profits and the lurking pitfalls that could accompany them. Goldman Sachs projected a 4% increase in U.S. business earnings if Trump's proposed corporate tax cuts are implemented. This projection has sparked a wave of optimism among investors and business leaders who are eager to capitalize on the potential financial windfall. This suggests that businesses could see significant profit gains under his administration. The anticipated tax cuts are expected to boost corporate earnings, leading to increased shareholder value and potentially higher stock prices. Lower tax burdens can free up capital for investment and expansion. Companies may use these savings to fund new projects, hire additional staff, or invest in research and development, thereby stimulating economic growth. Tariffs have long been a tool in economic policy. They can protect domestic industries. Trump's plan to impose significant tariffs on all imports, a bold move in the realm of international trade, has support from various sectors. Particularly targeting China with tariffs of up to 60%, this strategy has sparked considerable debate among economists, politicians, and business leaders. The U.S.-China trade war has been a focal point of this policy. He argues that these tariffs will protect American industries and encourage domestic production, potentially revitalizing sectors that have been struggling against foreign competition. By making imported goods more expensive, the administration hopes to shift consumer preferences towards domestically produced items, thereby supporting local businesses. He aims to boost the competitiveness of American-made products, making them more appealing in both domestic and international markets. Trump's proposed tax cuts, which were a central part of his economic agenda, aim to stimulate growth by putting more money into the hands of consumers and businesses. The delicate balance between stimulating growth and managing debt is crucial. The decisions made today will have lasting impacts on future generations, highlighting the importance of careful fiscal planning and policymaking. If you liked this video and would like to see more videos like this, please remember to like and subscribe. You can also check out this video about how the elections affect the stock market.